Alan Hibbard's here, precious metals alternative money specialist at goldsilver.com. Alan, good to have you with us. Not just stocks, it's not just the indices at or near all-time highs. Gold bulls continue to be rewarded for sticking with this one.
Yeah, thanks for having me, Ben. Yeah, gold is performing extremely well. And as you pointed out, for the last 20 years or so, gold has been in a bull market. I just ran the numbers the other day. And since 2003, for example, gold has returned over 10% a year continuously, even counting that 4-year drawdown that we had from 2011 to 2015. So yes, we're in a very strong bull market here. I expect it to continue. And of course, we're going to be getting some rate cuts from the Fed as early as next month and probably sustained for the next year or so. I'm expecting that to translate into a lot of bullish momentum for gold.
Yeah, I like that. Talk to me a little bit more about the rate cuts coming. We were just debating 25 or 50. Does it really matter for the gold bulls at this point, or are they content with either or?
Yeah, good question. I mean, I'm personally content either way. I like to build my portfolio in such a way that it doesn't really matter what the Fed does. It can be kind of tricky to do that, but I do have 10% gold, 10% silver. And yeah, I mean, if we get 1 quarter or 2 quarters of a cut, it's not really going to matter. We might get a full percentage point over the next year or so. It really could be a whole range of magnitudes. But I think in general, what a lot of people don't realize is that we're actually in a long-term interest rate hiking cycle, despite the fact that we're going to get cutting rates for the next year, let's call it. So, since we came off zero, the only place to go is up. So even though we'll get temporary cuts in the long term, I'm expecting a long-term rate hiking cycle. And counterintuitively, that's actually even better for gold than these short-term cuts. So if you want, I can elaborate on that, but it's a lot like it was in the 1970s.
No, I do. I like that point. I want to talk about this because in your notes, you bring it up. Fed took us off zero interest rates towards the end of 2015. You wrote by raising rates up to 2.4% over the next 3 years. Shouldn't gold have been negatively impacted, you asked? After all, again, it was already in a 4-year bear market. Wouldn't rate hiking cycle create drawdowns? Conventional wisdom, one would say yes. But you asked the question, or the question I guess I have for you is, how did this gold bear market turn into a bull? And talk to us about how it rose 36% during the 3-year hiking cycle that we're talking about.
Yeah, exactly. So if we go back to when the Fed first took us off zero rates, 2015, right? We're looking until today. That's a 9-year period. And so basically what happened is the Fed took us off zero, and then during COVID they brought us back to zero. Then we stayed at zero for a couple of years, and now we're off zero again. So there's really kind of 4 segments to that, and gold went up during all 4 segments. So it didn't really matter if rates were going up, down, or sideways. Gold was performing really well. And of the 2 out of the 4 segments, interest rates were rising, and those were gold's best periods. So gold has been performing the best in a rising interest rate environment, which is very counterintuitive. I think that catches a lot of people by surprise, but that's what the numbers say. And how did we turn from a bear market into a bull market? There's a few reasons, but I think probably the most profound reason is central bank gold buying. So central banks were net sellers of gold from 1980 until roughly 2015. So 35 years, central banks were selling gold, and that contributed to really, gold's worst bear market for two decades. Now central banks are buying gold, and they have been for the last 9 years. And I think that's really providing the support for gold regardless of interest rates. And that's going to continue.
Maybe, again, that's one of the themes we've definitely been talking about, central banks, again, that persistent accumulation. But also in your notes, you wrote how gold's been up regardless of the direction of interest rates, right? So again, you've got the central bank theme. You also have, as you noted, geopolitical global uncertainty and inflation. Talk to us about the other 2 contributing factors here.
Exactly. So there's so much uncertainty in the world. It's kind of unbelievable what's going on. I mean, in the last 2 months, we almost, lost, quote unquote, the 3 major U.S. presidential candidates, stepping out for health reasons, a near miss in an assassination attempt, and then sort of dropping out, but really staying in the race. It's a little bit uncertain there. So that's totally unprecedented. And that's just in the last 2 months. And that's just in the United States. Then around the world, we're seeing successful assassination attempts, wars that are getting out of control, migrant crises, which of course are crises not only for the migrants themselves, but for the people in the countries that they're going to, and of course for governments who are trying to manage all these different populations. there's a ton of strain on infrastructure, housing, food, absolutely everything. There's so much uncertainty in the world, and hardly anybody knows how it's going to play out. Maybe nobody knows how it's going to play out. It's a tough challenge for governments. It's a tough challenge for the private sector. Businesses aren't sure if they should be investing yet, or if they should wait, if they should relocate to a different country. There is so much uncertainty everywhere. And when uncertainty is this high, it makes a lot of sense to grab onto something that you can hold in your hands, that you can control, and that's gold.
I like that, especially with the trend we're seeing. We talk about how it's your friend, right? Continuation more likely than change. And I guess that's what I'm wondering. Do things change now at all, considering that we've got a situation where the Fed has sort of moved, or I feel like shifted their attention to combating inflation to labor conditions? Does that shift the environment here for gold at all, or do you see conditions remaining?
It's a good question. And so, the Fed chair, whether it's Jerome Powell or anybody else in the past or in the future, they like to focus on one particular thing at a time, usually. And so the Fed has just changed focus from inflation to the labor market. Even though inflation is still up at 2.9%, that's kind of high compared to their 2% target, but it's low compared to the 9% inflation that we saw in the middle of 2022. So everything's relative. So now that eyes are on the labor market and we see an uptick in unemployment, the Fed wants to make sure we don't get a recession. Maybe they'll be successful, maybe not. But that's why we're getting those rate cuts. And ultimately, everything is cyclical. So what goes up must come down. That's in terms of interest rates. It's in terms of the labor market, inflation, and so forth. But I think just about everything here is going to be bullish for gold because of those macro factors that we talked about. When you zoom out, higher interest rates are good for gold. Lower interest rates are good for gold because of all the inflation that we're getting right now. If inflation were to somehow go away, if the government were to stop printing money, printing currency, then perhaps it would be a different story. But for now, I'm bullish on gold.
So it sounds like the short of it is gold's experienced most spectacular bull run ever during a massive rate hiking cycle. Other contributing factors ultimately contribute to the mindset where you are in your position, that you see us just now entering another such period where we could see another prolonged bull run.
Exactly. So in the 1970s, 1960s and 70s, we saw rising inflation. So in order to deal with that, two things happened. Individuals flock to gold to protect themselves from inflation, and the Fed hikes interest rates to try to fend off inflation. So what we saw was the price of gold shot up like a rocket while interest rates were rising, and that was all because of inflation. We're getting a very similar period now where we're going to have a lot of inflation despite this, short-term pullback from 9% to about 3%. We're getting a lot of inflation. And so two things are going to happen in the long term. The Fed is ultimately going to hike rates again, and investors are going to continue to flock to gold as they have been.
Okay, Alan, this feeds into what a few of our guests have talked about in terms of commodity super cycle. I wanted to get a couple quick thoughts on some of the industrial metals. I know you follow silver as well. I was looking at it back up to 30 and copper up to 430. Silver's been lagging a little bit. Is there some catch up to be had there?
Definitely. I'm a big fan of silver, and silver is not at all-time highs. It is hovering around 30, as you mentioned. I think 29 when I checked a little bit ago. But what a lot of people might be surprised to hear is that both gold and silver are up about 23% on the year. So they're performing about the same, but gold is in most of the headlines because it is making those new all-time highs. Silver is still lagging. I expect it to catch up. And ultimately, in these long-term bull markets, silver does outperform gold in the long run. So silver is a very attractive buy right now. It is significantly below its all-time high. That means it's on sale. So if you're a fan of the theory, now would be a good time to buy it while it's cheap.
Alan, I feel like some of those contributing factors, those 3 points you brought up that have helped keep gold buoy, don't necessarily feed into silver, right? You don't get it as that fear factor component, right? The diversification, the central bank intense buying that we've seen. It's more tied to, I feel like, some of the macro kind of global narrative in terms of the economy, and with China not really participating still to this point. You can understand why silver and copper, for the most part, have struggled some.
Yeah, exactly. So silver, just like copper, is more so tied with the industrial part of the economy rather than the monetary part. So most of the silver that's mined is used in industry. And so what we'll see is that there's actually a silver shortage, and that we've been demanding more silver than we're supplying. So that's been happening the last 3, almost 4 years now. And ultimately, that's going to mean that the price has to go higher. And as we continue to grow the economy, as we move into a greater emphasis on electric vehicles, renewable energy, as we expand consumer electronics, all these things use silver. Silver is the most conductive metal on the periodic table. So it's used in just about everything. That's a tremendous demand for silver, and the supply is not catching up. So eventually, the price is going to have to move in order to compensate for that supply-demand imbalance.
Yeah, in theory, yields coming off or rates coming lower might fuel some of the demand for some of those products as well, and further add to that advance if we do start to see that. Appreciate you joining us, Alan. We'll continue to watch commodities. We didn't even get a chance to talk about the weaker dollar and how that's been feeding into this, obviously tied to rates, but New Year lows again to begin the week. Alan Hibbard joining us, precious metals alternative money specialist at goldsilver.com.